Hello and welcome to this week's community call. We are going to be going over the infamous SMTs. So hopefully we'll be able to give you a breakdown on how we use them, how you can use them, and just enhance your understanding. So straight off the bat, Tom, I'm just going to ask you to give your best definition of an SMT.
Okay, so an SMT, also known as an SMT divergence, is simply where you have two correlating pairs. As you guys can see, there's some examples on the screen of that. So this could be anything as such as GBP USD and Euro USD, or the Nasdaq and the S&P, correlating pairs, and one pair will make a high and maybe sweep a high, should I say, and the other pair will not. So then you'll have a divergence in price action, which could signal a reversal. So where one makes a sweep, the other will not. That is simply what an SMT is.
Very well said.
Answer your
Don't need much
question.
more than that. But I'll add that it can also obviously happen on the flip side. So Tom's example there was highs.
Yeah.
It can also happen on lows. I'll also pre-warn everyone, if I drop out, it is because my connection is awful at the moment. So Tom is more than equipped to take over in my absence, but just to warn you guys. So we'll hop straight into an example, and I'm going to go with the one on the right of Tom's screen. So this is one that I've spotted before the show, and essentially this is GU on the left and EU on the right. So I don't know if you can make that bigger for us, Tom, just so I can see if that's all right. There we go. So as we can see, what's happened here is we've created our Asia range, which is the box circling kind of the consolidation on the left of each chart. It's the grey box. And GU has been very nice to us, and it has swept the high of that, taking all that liquidity. Whereas, like Tom mentioned before, EU hasn't, and this is the divergence. So one has swept a high and the other has not. And this is kind of an extreme example. There was definitely something else going on other than just the SMT. But as you can see, after that, they both just dropped off. And they fell off pretty hard. And you can see there's a few different ways you could enter that. So if you're someone who just enters off SMTs, you'll obviously get in. There is also a 5-minute fair value gap formed after the SMT. There will be 1 minute in there. I'd show you more, but it had to be a screenshot just because my internet is so bad. But that is an example of an SMT, and I guess a little bit on how you could actually use that. So the way me and Tom would use them, we wouldn't be using them in this scenario, but just to show you, we use them as a confluence. So that means we don't necessarily just see an SMT and enter. We see that SMT, wait for something else to happen, and then enter. So for us, it'll be that fair value gap. I can go straight into the one on the left if that's okay with you, Tom, because this is an example of how we used it to get out of a trade. Can you hear me?
Sorry, yes. What did you say? Did you want me to show you this?
I said, did you want me to go straight into it?
Yeah, sorry, I couldn't hear you. It was cutting out. But
Oh,
yes,
don't worry.
I'll
Don't
let
worry.
you just go for it.
So, chilling. As we can see, this one on the left, we didn't have an SMT leading up to the trade, so it's a bit of a different scenario here. This was purely entered off of just the system. It was a 5-minute BISI. We'd swept Asia low on both pairs, so I was looking for the reversal. As you can see, I get in off that 5-minute, and PA just turns into a barcode, so automatically I'm not liking it that much. I am looking for a reason to get out. And then towards the 2-3 hour mark, which a trade like this shouldn't be running that long, we then push up and we go very, very close to TP, which is exactly at 2R, but we reject off of it. And as we reject off of it, not only do we hit a 5-minute BISI, but we hit the magic word. We create an SMT. ES takes a high and the Nasdaq doesn't. This gave me all I needed to get out, and I did get out of this trade. This was one I took live, unlike the previous example, and I got out on the candle after the SMT, which got me out at pretty much bang on 1R. So I managed to save a stop loss, and as you can see, after that SMT, price did just push down. So not only can they be used for entering or a confluence, but they can also be used for getting out of your trade, saving your capital. So, Tom, I'll let you continue with your
Yeah,
examples.
so very well said there. Yeah, so an SMT isn't necessarily just a confluence, it's actually quite a useful tool to read and understand price, as Ethan's obviously going to mention. You've seen how you can use it to be getting out of trades. You've equally seen it how, if you were, like you were saying here, it's gone there. If you were looking to enter on a 5 minute here, you obviously can use it to be getting in. Now, this is exactly what my example is going to show you here. So I do have it already drawn out, kind of ruins it, but I'll get rid of this here. So simply SMTs are almost a way of allowing you to read price. So when you're looking for an SMT, you're looking for kind of key structure points. So for example, in this instance here, we see price makes a move up. Now, we already have an SMT here, like I said, drawn on. Now we've seen this SMT. If this SMT had no higher time frame, then there's a likelihood that we could expect this to not work. So SMTs are something, it's a confluence, not necessarily always your entry requirement or your entry reason. SMTs work best as a part of a range of tools. So in this instance, we've got a 5 minute here. So as you can see, price makes a move higher. Now, we trade the silver bullet. So another example of how we may want to use an SMT is we want to see an SMT occur for us to catch a reversal or likewise a continuation. So again, what do we see here? Price instantly has come down and created another SMT. You see here on ES, price has run lower. So when using correlating pairs, you can use SMTs not just in an aspect to gauge where price is, but you can also see where one pair is potentially running stronger or weaker than the other. So SMTs are also kind of an indicator to what is to come. So for example, if I can see that the S&P is in a tighter range, that I could expect ES to be the one to create the SMT, to be the one to take the low, whereas NAS might not. Now, understanding that you're going to have two different pairs, obviously with different characteristics, and understanding that one is going to be stronger or weaker on different days, different market conditions, it allows you to prepare for the SMTs. So instantly, I will obviously expand this chart for you a little bit here, but you can very easily see here that the NASDAQ is a lot more expansive than the S&P. So for example, this is the range down here where we're seeing the NASDAQ, but see how much higher it expands. So when the S&P does not expand as much higher, we can expect the S&P to be the one sweeping the low. And as we've seen that here, again, off a higher time frame confluence, we've got our little BISI over here. Now we're looking to buy, we have our confluence, we've got an SMT. What can we do? Well, we can now look to trade again with that SMT behind us, and boom, price can play out. Now, for those of you that think this is a hindsight master, did in fact take this trade live. If I conveniently have it open, I will show you. I will have to drag this over for you guys 1 second.
Your dogs sound really excited about this
Try it now.
SMT. I guess they're going to go away and catch some mad RR trades off some SMTs.
Yeah, they just love it. They just love it.
Yeah.
SMTs, they are just exciting, and as you can see here, there's the proof of execution. So SMTs are something that when you see, they're almost like a no-brainer. You've got an SMT, and a way of looking at SMTs is they are in essence a liquidity sweep. Although your pair that you're trading, for example, I just trade the NASDAQ, I don't trade the S&P. When ES sweeps the low that I want to be swept, and then NAS does the displacement, I get really happy because I'm like, wow, this is great confluence. I've in essence got an A-star liquidity sweep. It's not just a sweep. I've now got another confluence behind the sweep. So SMTs can seem really technical, but at the end of the day, they're not. They are in essence just a bit more of a technical liquidity sweep. And best way to use them is to have bias and context and conviction. It's very easy to be on the micro and looking for SMTs and using them in the wrong aspect. For example, here, I will get my little paintbrush out. Try a bit bigger. So, like I said, if my bias was to sell, I could be looking the opposite way. And here is actually an SMT. You see that? There's an SMT here. So we have an SMT to this high, to the open, to the NASDAQ. However, you could view that in different ways. SMTs are they're telling you information. You don't always have to act on it and trade on it. Likewise, if I was to take a 2R short off here, there's a likelihood I would not got my 2R. You want to have a bias, conviction, and how to use them. SMTs tell you a direction. It doesn't have to be a lot of movement, but in this instance, I'm looking to buy. So when I see this SMT here, I'm like, this is perfect. Price is selling off to where I want to buy from. Comes down, I get my SMT off where I want to buy. Perfect. That now aligns with my bias and what I'm looking for. So SMTs, you want to not use them solely as something that means you have to jump in a trade. You want to use them as a tool, like all things. So apply them. And one thing to actually note as well here, the first SMT I mentioned here, this SMT, same way that worked, same way if that was another liquidity sweep, that's now become that is a relative equal low. So sometimes SMTs can become draws on liquidity because obviously people trade off SMTs. Sometimes that is still technically, like I said, an equal low. So price will still potentially want to draw to them. So sometimes you'll notice you'll get SMTs. You'll get a movement, but price may want to come back and take them out. And usually that's when you want to get a stronger SMT form. So best way to obviously learn about these concepts is not by watching videos from us or anyone else, but simply to go backtest and apply them to the market. SMTs are reversals in essence. So you've had a few examples there. You've had EUGU, 2 NAS and ES trades. You've had 1 on the 5 minute and showed how we could use it to get out. Here you've seen me how I'd use it to get in, but also read price action. So I'd say apply is the next step for you guys. And my one tip, my one recommendation is try not to get sucked in on the macro as well. What I mean by the macro, or should I say the micro, is looking on the very low time frames. For example, if you were to look kind of on these lows, when you start looking for SMTs too hard, you end up kind of finding them. You want to be looking for structure as your SMTs. So we're talking highs and lows. Not really these little wicks all in and around here because they're easily going to form. You want SMTs to be off key structure points, and that's when they're going to hold the most strength. Same way, a 1 minute is not going to be as strong as a 5 minute. So, I'm not sure if you've got anything you want to add to that really, but yeah, that was my example, and yeah.
I was going to pretty much say that, if you didn't say it, was that it is very, very easy when you're on lower time frames, especially like the 1 minute, even sometimes the 5 minute, depending on the window you trade. If it's an hour, it's not too bad, but if you trade, say, the whole morning, a lot of SMTs will form on the 5 minute, and then obviously, like Tom said, the same for the 1 minute. You will get lots of wicks that cause SMTs. Not all of them are valid, and the only way you can tell, other than us telling you this and that they come off of structure points, is what you're looking for, as Tom said, is again to just go do it. Whether this is back testing or forward testing, you just need to go try it for yourselves, because at the end of the day, all this trading stuff is just pattern recognition, and an SMT is just another pattern that we're adding to your arsenal for when you go to attack the markets. So the more you see this, the more you'll know what it looks like, the more your brain will get familiar with spotting them, because when it comes to it at first, they're difficult to spot, and you'll have to take a few minutes, pause each time you think one's going to happen or each time you're looking for one to see if it's happened. But by the end of doing a few months of back testing or a good bit of forward testing, you'll become so familiar with them that you just notice them, you just see them, and that's the same with any kind of pattern you're looking for, but especially with SMTs, because they do like to hide themselves. But no, I can't think of anything else. I think we've showed them how to get in, how to get out, how to read structure off them. So yeah, you guys just need to go do it.
Yeah. I just thought of another way to think about them as well. You can have an SMT, not necessarily to sweep or low. You can have an SMT where price will move to a point. So let's say price expands in correlation. So you have the Asia range, let's say, ES and NAS. They both are expansive. They both form an hourly BSC. But let's just say London Open, the S&P, yes, it might SMT and sweep lows and all that sort of thing. Fine. That's another confluence, obviously, that SMT. But another SMT you can apply is the fact that ES has tapped into the hourly BSC and NAS hasn't. So then if you saw a move out and run higher, potentially you could see that be supported because you have the higher time frame backing for the SMT.
It says, um, I don't think so. It just says it's failed, so I don't know if. One sec.
That's fine.
Uh,
I'll just carry on. Um,
it it says your whole recording's failed. I think. I don't think we can. Surely we can hear you. It says
what?
it's still recording, but it says it's failed.
I'll just carry on.
Yeah.
Often, when you have that happen, so you have ES, tap it and then run higher, I would sometimes still expect nows to come down and tap back into it. Maybe there is a draw on liquidity, maybe it wants to go Super Asia high, maybe it wants to go take a previous high or London high first, but you can have SMTs into fair value gaps. You can have SMTs into point of interests. So that's just another thing to consider. Obviously, that will align with some lows, no doubt. Because obviously, lows form fair value gaps. But yeah, just another thing to
Yeah.
consider. But other than that, I think that's pretty much everything you need to know about SMTs. So, don't know if you have anything you
I
want
think
to
I
add.
have one last thing that
Oh,
ties into pretty
interesting.
much what you've been saying, and it's just a quick one. But if you watch last week's community call, it will tie in, and we use this example as well. But me and Tom are heavy advocates of the Asia range, understanding the Asia range and how to use it, because we use it in our training every single day. No matter what strategy it is, we use the Asia range. If you're SMTing in Asia high or Asia low, we have found that to be very, very effective. As in,
Mm.
if we SMT the high, it's a very strong conviction for us that we're going to push down. If we SMT the low, we then get convicted that we're going to go high. So like we said, you need to find out for yourselves, you need to apply it, you need to look through charts. But these are the key things that we look out for. Like Tom said, you're looking for structure points, you're looking for it off things like fair value gaps as well, like higher time frame fair value gaps. And one thing we've noticed is SMTs off of Asia levels. So go do your testing and let us know what you guys find.
Sounds good. Yeah. Obviously, that applies to all sessions. New York to London session and everything. But other than that,
Of
I think we're
course.
good to wrap up there.
Awesome. Right, well, I hope everybody enjoyed the video and I hope we got some help out of it. Um, comment below if you've got help out of it. Let us know what you found with SMTs. But yeah, thanks for watching, guys, and we will see you next week.